gotta be flipping my flapjacks. The big headline on CNBC here today. Treasury Secretary Besson says White House is heading off a guaranteed financial crisis. Why is it that it seems like every day you wake up and you go check the financial publications, you're seeing stuff like this and tariffs and Doge and oh my gosh, it's so scary. And you start thinking, man, no one's going to spend any money in the economy. Like you see the consumer sentiment numbers, it's got to all be bad. So I said, let me go to the real world. Let me see what's going on out there. So it's going to be April soon. Weather's going to get nice and warm here in Vegas. So I said, let me go get a few pairs of shorts. So I go down to Foot Locker. I got to wait 15 minutes in line because there's so many people in front of me. I'm like, what the heck? What are you guys doing in here buying clothing? Like, shouldn't you be like at home? Like, what are you doing here, right? Then a friend and I were going to go play some craps at the Wynn. The Wynn tables on the Wynn side were like $100 minimum bets to play craps, which means you're backing with like another $300, $400, $500 behind that. It's like ridiculous. So when we went to the Encore side, there was one table available that had $25 minimum. $25 minimum. Anybody that plays craps, you know what I'm talking about. That's ridiculous, right? That table was so busy, we just ended up having to play $50 minimum. Like, geez, you guys got plenty of money to play at the casino, don't you, right? So then at 10 o'clock at night that night, we go to this new hopping place called the Guest House here in Vegas. And this place is a zoo. We were lucky to get 2 seats at the bar. Like, it was ridiculous at 10 and something at night. And people apparently got $15, $20, $30 to spend on drinks because the drinks were not cheap there. Then I go with the family. We went to North Tally a few nights ago. We showed up there just after 8 o'clock. And we were fortunate there was one table available. And we got that one table. Place was a zoo, inside, outside, the bar, standing room only. Very, very busy. So I got up on the table and I said, listen, guys, haven't you been checking CNBC? Did you not hear about Trump tariffs, Doge? Did you not hear about Besson and what he said? What are you guys doing out here spending money? And then everybody threw their bowls of spaghetti at me and it got a little messy, okay? But the moral of the story is there's 3 things guaranteed in life, and those are death, taxes, and Americans are gonna spend money. They're going to spend money until the day comes where no one can get home loans and car loans and credit cards or anything like that. At the end of the day, people are going to spend money regardless. It doesn't matter if it's a great financial crisis. It doesn't matter if it's Rona. It doesn't matter if you got a million scary headlines. People are going to spend money out there. In today's video, we're going to go through 8 stocks that are buys now, very low risk stocks. When I say a low risk stock, I'm talking a stock that has very low probability of losing you money over the next 3 years. And all 8 of these stocks have insane upside potential over the next 3 years as well. Okay, so we call them low risk, high reward stocks. I hope you guys enjoy this one. This video took me many hours to put together for you. All I need from you guys, one thing only, is for you to smash that like button on this video. And I appreciate y'all for doing that. Okay, I hope you did it. Did you do it? Did you do it? If you did, please do it. And additionally, if you want to be subscribed here to the channel, you can certainly subscribe. It is free to do so. Join 800,000 plus folks that have done that. Now, if anybody's got a green thumb out there, I need some help. Okay? Is my palm in trouble? It's very discolored, and I don't know what's going on here. Basically, I have 5 of these palms that sit in these pots that go against my back wall, and the lights shoot up at them. It looks really nice at nighttime against the tiled wall, but this one's my trouble. This is my troubled child right here, and I don't know if it's going to make it or if this is not a big deal. Okay, so if you have any advice for me, let me know that, okay? Additionally, since my kids are on spring break, I had my 2 oldest boys plant a garden today. So we got a little garden going, and we'll see what comes of that, okay? Spring's coming, baby. It's coming. Weather's going to warm up real nice. Alrighty, guys, 8 stocks to get into. First one of these 8 is Celsius Holdings. Celsius Holdings. Listen, look at this. We're now up $21,000 in the stock. It wasn't that long ago that we were down on Celsius Holdings. That shows you how fast things can flip in the market, right? And keep in mind, the market's not even in a good place right now. The Russell 2000 is still down like 17, 18% from the highs. Imagine when the market gets rolling again and the Russell 2000 gets rolling again. Imagine where a stock like Celsius is going to be in that situation. Oh my gosh. Scoop up as many shares as you possibly can under $30 of this stock, okay? Now, in regards to Celsius, they have a big deal that should be going through here in the next, we can call it the next few months, okay? And it's to buy Alani, which is a very popular energy drink brand, specifically with women. They do have some other products as well, but energy drinks how they really make their money, okay? And very, very popular with women specifically. Now, if you want to know, is this deal going to be allowed to go through? There's a very important interview that transpired a few days ago. Not a lot of people knew about this interview. Not a lot of people watched this interview. But of the 8,000 people that did decide to watch this video, I can tell you the chances are the 8,000 people that watch this interview are very high net worth individuals because this is a very important high level subject. But the new FTC chairman went on CNBC and spoke for 15 minutes about his view on acquisitions, allowing deals to go through or not go through. Now, previous to him was this woman named Lina Khan. Now, Lina Khan it seemed like she wouldn't allow anything to go through, okay? That was kind of how people felt about Lina Khan running that division. Now, this gentleman that's coming in, he still sounds like he has a little bit of a negative bias toward big tech and any business that could be seen as a monopoly. But with that being said, he basically said, like, for smaller deals, they're going to get out of the way, essentially, okay? And unless they feel like they can win in court for sure, like, they're not going to tie up resources. And they have limited resources, and they're already going to have those resources tied up in going after these big tech companies, okay? So, like, the chances they would not allow a Celsius deal to go through, I think it's pretty darn low, because it's not like with Celsius and Alani or combined, it's not like they're going to be some monopoly business at this point in time. Even when you combine those companies, you're going to be talking about a market share that's probably in the 11 to 12% range, somewhere in there roughly, right? So, this is kind of like store shelf space, right? And this is kind of what you'll see at a lot of big stores. Red Bull dominates, Monster dominates as well, right? Because they have their Monster brand, they also have Reign brand, and they have Bang Energy as well. So those two companies are the monopolies really in the industry. And so let's say Celsius buys Alani, and then Monster said they want to buy Celsius. That, in my opinion, would be an issue, and that's a deal that I'm not sure would be allowed to go through, because then we're talking about, that entire combined company might have 40% or 50% market share. So it might be seen as like a monopoly type business. This deal, honestly, pretty good chance it's going to go through. Also, by the way, based upon his interview, random here, I think there's a pretty high probability that Fubo deal is going to go through. Fubo is not one of the stocks we're talking about here today. I just want to mention that if anybody's watching this that owns Fubo stock, pretty good probability that that deal will be allowed to go through in regards to Disney there. So this is a situation we're looking at here, right? By the way, this is random. Somebody posted this inside the private stock group's Discord chat. Look at this. We had a Celsius, and we got a Celsius stand next to Elf, man. Elf on a shelf. That's beautiful. And then somebody posted this inside the private stock group as well. Look at this. Oh my gosh. Look at this Lego situation. Like, oh my goodness. Are you flipping my flapjacks? Have you ever seen somebody with this many Star Wars Legos before? Like, holy smokers. That's no dang jokers, but Celsius. We got a popular Celsius chat in there. Now, there's a big deal that news came out here in the past few days. In PepsiCo's to acquire a prebiotic soda brand Poppy. I'm sure you guys have probably heard of this brand before. It's popped up everywhere, honestly, in the last 2 years, okay? Now, there's some people thinking that because this deal's going through, this might mean that Pepsi's going to end up acquiring Celsius, essentially, okay? Now, I'm not so convinced Pepsi's going to buy out Celsius outright in the next year or two. And the reason being is, if you look at Pepsi and Coca-Cola, they have a horrible history of trying to build and grow energy drink brands. Horrible history. Both those companies tried many times over the past 20 years, and it failed and failed and failed. So what Coca-Cola did back, a little over 10 years ago is they basically just bought a stake in Monster. They paid a little over $2 billion, and they bought about 17% of Monster, essentially. And they said, Monster, you continue to do your thing, run your energy drink business, and then we're going to hopefully be able to grow this stake into a massive amount of money, which they've been able to already generate, I can tell you, some incredible gains off of that. And then if Coca-Cola wants to sell that stake off someday, they can. If not, they can just hold it on their balance sheet, right? Which is absolutely phenomenal. And that's kind of what I view Pepsi is doing in regards to this situation. Because if you look at when Coca-Cola did that deal, right? Look at where Monster's revenues were at that particular time. Look where Monster's revenues are today, right? And I think we're going to see a similar phenomenon if we fast forward the next 10 years and look at, where Pepsi bought into Celsius at versus where Celsius's revenues and profitability are going over this next 10 years, okay? So it's a potential that Pepsi might buy the entire Celsius company out in the next year or two, but I don't think it's in the best interest of actually Pepsi or Celsius to maybe do a deal like that. But do keep in mind that could always happen, and so, it's something to factor in there, right? Now, in regards to Celsius, still very early days in regards to the Celsius growth story, right? Very early days. Like, Celsius has a long runway of growth over this next 10, 20 years. And their name of the game is just them aligned with Alani is they just need to continue to grab some market share here and there from Monster and Red Bull, and for the overall pie to grow bigger, and then for them to branch out into other products over time, right? Now, additionally, when it comes to profitability, you got to understand profitability for Celsius. We're in inning 1 of profitability right now. This is an uneven stage where profitability is all over the place, earnings per share is all over the place. Inning 2 and inning 3, which are 2026 and 2027, we're going to have some fun. You're going to see an earnings per share skyrocketing for this company in 2026 and 2027, in my opinion. Once this Pepsi situation's all done, as in regards to the inventory work down there, and then the Alani deal goes through, 2026 and 2027 are set up to be banger years in terms of growth rates and in terms of profitability. So if you're wondering, like, when's it going to be really, really fun to be a Celsius holder? 2026, 2027. Now you might say, why buy the stock now and not wait till 2026, 2027? By the time the numbers are already booming again, revenue's booming again, earnings per share is booming again, the stock's not going to be $30. The stock's going to be a mile away from $30 by that point in time. So what you would have to pay is like way more than what you're paying right now, right? So the way I view Celsius right now, in regards to kind of buy territories and whatnot, right? Now, keep in mind, this will change over the next 3 years, 5 years, 7 years as the company grows bigger. You're willing to pay more and more for the company. But as of today, $25 and under is load the boat. And if you saw what I was really loading up at, it's around those prices. That's a load the boat situation. Under $35 is a strong buy. Like, you're set up to do very, very well over the next few years if you can get shares under 35. Under 45 is a buy. Under 55, I'd call it light buy. So that's kind of, let's say it's like $50 a share right now. I would say lighten up on the buys a bit. And then over 55, as of right now, I would say just is a hold. Over 100 would definitely be a sell as of right now. Now, someday $100 for Celsius might actually be a deal. Do keep that in mind. Like, that's a potential 5 years from now or 10 years from now. Not today, though. So that's where we're at in regards to Celsius as of right now, okay? Stock number 2 of these 8 stocks is Elf Beauty. We saw it in a photo just a bit ago, right? A stock I'm up 809% on in the public count. Has done tremendous. And I got in back when this company was kind of a, really, really small cosmetics company. They've grown a lot over the past few years, but this stock right now under $100 is a gift. Do keep in mind, if you go back to around this time last year, the stock was around $200. So do keep that in mind, okay? But under 100 is a huge gift in regards to Elf, okay? This is a growth monster of a company. Now, analysts are bearish. We're looking at 1000xstocks.com, taking analyst consensus kind of into respect here. Analysts are so bearish on Elf's numbers over this next year and a half, it seems like. Listen, I've been in Elf many years. I've seen analysts underestimate Elf again and again and again. They always underestimate Elf. Elf comes in and smashes the numbers. They beat, like, if you look at Elf's last 25 quarters, they smash and they smash and they smash. It's ridiculous. And analysts always fall in the same trap again. They go bearish on numbers, and Elf comes in and easily beats the analyst estimates. And then analysts are like, whoa, what happened here, right? And the stock goes booming again. And so that's what we have going on here with Elf. And it's a ridiculous reoccurring situation that happens in regards to Elf again and again and again, okay? Now, additionally, check this out. We're still early days in Elf's profitability cycle. We're about to go into, right now, Elf's second inning of profitability cycle, which is going to be pretty immense. Because remember, Elf has been growing revenue at such a ridiculous clip that they haven't really been even focused on profitability. In my opinion, 2025 and 2026, the company's going to start focusing more on profitability. Keep in mind, they're going to still want to grow the brand, grow it international, and all those sorts of things. Now, additionally, something that gets talked about a lot in regards to Elf and why the stock is $66 today, not $166 today, is tariffs. Everybody worried about tariffs. Oh boy, tariffs. Elf's already been through tariffs. They can easily offset that cost, no problems. No problems. Maybe it would affect numbers for like 1 quarter. It doesn't matter. If you're a long-term investor and you're worried about tariffs in regards to Elf, don't. It doesn't make sense. When it comes to Elf, they can easily offset costs between supplier agreements, between also like going up on price. Like, Elf can easily go up 50 cents on a product, and the consumer's not going to say, I'm not buying Elf now because 50 cents more. That's not the way this works, because their products are so cheap. So you got to understand when they're importing a lot of this good, I mean, a lot of these goods are probably like the actual product cost. Because what you see on the shelf when Elf sells something on Amazon or at Target or Walmart, you're seeing a lot of products that are priced like $6 to $12, right? When they're importing those products real cost is probably like $2 to $5. So you slap a 25% tariff on that, on a $2 product, $5 product, it's nothing. It's nothing in terms of how much that goes up. And Elf can easily offset that by going up on the retailers, and then the retailers go up on the consumer. So by the way, just so everybody knows, tariffs always end up actually getting paid by the consumer in the end. So everybody's clear about that. Economics 101. It always ends up coming back to the consumer. But at the end of the day, like if Elf goes up 50 cents or a dollar on a product, which could easily offset the majority of tariffs situation, it's nothing. It's nothing. The consumer's not going to say, I'm not buying Elf now, because what's your alternative? Products that are probably inferior, that are even more expensive. Do keep that in mind in regards to Elf, right? Now, additionally, this stock is trading far too cheap. Forward P on the stock's now in the 20s. In the 20s for Elf on a shelf, you gotta be flipping my flapjacks. And here's the deal, right? Elf is now a de-risk stock. If we went back to past P ratios for Elf, we were talking 200s, we're talking 85, 60s. Even if we went back about a year ago or so, I believe the PE ratio was in the 80s, somewhere around there roughly, right? This stock has now been de-risked. Whenever you buy into a company that has an extremely high PE ratio, you're definitely setting up for some risk, because that PE ratio could easily get condensed over the next few years. But when you can buy a growing company at a very fair forward PE, let's say in the 20s, now we're talking, baby. Now we're talking about a great opportunity, and that's where Elf's at now at this point in time, right? Do keep in mind, one of the stocks I mentioned in 4 stocks I'm buying March 2025 edition was Elf. So if you want to hear me talk more in detail about Elf stock, check out that 45-minute beast video there, okay? Now, before we get into stock number 3 of 8, I had a beautiful fountain built in front of my house last year, right? And it came out gorgeous. I absolutely love the look of it. The architect that kind of put together the project did phenomenal. All the gentlemen that worked on that project did a phenomenal job, and I'm so happy with it. I think it came out gorgeous, right? Now imagine the people putting that project together. They never learned how to do any of this. They never learned about plumbing or how to do tile work or anything. Could you imagine what that project would have looked like? Nothing would have worked. It would have been the ugliest thing ever, instead of this beautiful thing that it came out to be, right? Here's the issue. People are in the stock market, especially a lot of people that got in the past year, and they're just winging it. They have no clue what they're doing. They haven't learned how to do things properly, and they're just throwing money around in stocks. How do you think that project's going to turn out over time? It's not going to turn out very well, right? In those alternatives, you could learn all this game. You could learn income statements, balance sheets, cash flows, how to properly value growth stocks versus dividend stocks, value stocks, right? You could do that, or you could just wing it. Your project's going to come out horrible, absolutely horrible, right? If you're somebody that actually wants to do the project right and build out a great portfolio over the next few years that's going to help you prosper for a long time to go in the future, right? You can apply to our own private stock group. That will be pinned comment down there today. Get access to all of my best course curriculums, my private Discord chat with the 6, 7, and 8-figure members, access to 1000xstocks.com so you can know if you're getting a great deal on stock, getting ripped off, all that good stuff, okay? Or you can just wing it and see how it turns out. It's not going to turn out very well. You want to create a masterpiece, you need to take things to a much higher level. Pin comment down there, fill out a form. We'll see if we can get you access to that in maybe the next week or two, okay? Alrighty, third stock of these 8 stocks up here, that is a buy right now, PayPal. PayPal Holdings, they have a few different business lines, but the main business lines they have is PayPal and Venmo. And off of that, they have a bunch of other businesses that kind of branch off of that, okay, including the Braintree business. But PayPal and Venmo are the big dogs. If you're wondering how's this company grow, it's PayPal and Venmo, okay? Now, under $100 is looking great for PayPal. So far, we're up $22,000, almost $23,000 on the stock overall. The thing with PayPal is it's just a stable revenue growth company. It's not the flapjack flipper in terms of it's not going to be the company that grows revenues 30% a year. That's not PayPal. PayPal is going to be a 5 to 10% revenue growth a year type company for many years to go in the future, and that's fine. The only way to make money in the stock, people think you have to own these ridiculous growth companies, right, in order to make gains in stocks. It's not true at all. And many times, a lot of those crazy growth stocks are already priced in for that growth. And you could set, like, let's say, for instance, ELF is a perfect example. ELF was the last stock we just talked about, right? People think like, oh, I got to buy ELF at $200. And remember, at this time last year, people were paying $200 or more for ELF stock. So you go buy your ELF stock at 200 something because it's very fast growing, even though the PE ratio is extremely high. And then all of a sudden, ELF's growth rate's slow. And next thing you know, you're sitting on a 60, 70, 80% loss, right? And now you need the stock to triple or more just to get back to where you used to buy at. That's a problem. With a stock like PayPal, we don't have that problem because we have a very low valuation on this company. And so there's a lot of money to be made in a stock like PayPal, even without crazy revenue growth. Like, we don't need crazy revenue growth in PayPal to make a lot of money in the stock. As you're already seeing, I'm already up $23,000 in the stock, and we're still early days in regards to this one, right? So when it comes to PayPal, additionally, we have stable uptrending margins recently as well. Gross margins and net margins, that's what you love to see. Additionally, if you look at the earnings per share, our earnings per share for this company are going to take off like a rocket ship in 2025, 2026, because the net income is going to keep pouring in for this company. But the company creates so much cash flow, so much free cash flow, that then they're able to put that money into these massive share buybacks. And they're going to take incredible amounts of shares off the market, which means if your net income is going up and you're taking a ridiculous amount of shares off the market, right, your earnings per share is going to blast higher. And that's what you're going to witness in 2025 and 2026. You're going to see a company that's earnings per share go to the moon, literally. And people are like, what? Operating cash flows of this company have built out an immense amount. It's such a great business, right? Operating income's built out. Like, oh my gosh, right? Now, we have a new feature on 1000xstocks.com that's called advanced projections, okay? We have our intermediate projections, which I'm sure you guys have seen on the channel many times, and now we have advanced projections, okay? Now, I know there's a lot here, but let me just kind of break this down to you, okay? PayPal is a company that I would say should be able to grow revenue around 7% per year on average over the, from basically 2025 through 2029, okay? So I have them growing 7%. As far as cost of revenue, I have that going up 5% per year. And then as far as operating expense, I have them going up 5% on average a year as well, right? Now, our other income expense category, I have nothing going on there because that can kind of be all over the place, right? Additionally, I think they should be able to take a minimum, and this is bare minimum, of 5% of their shares outstanding off the market over the next 5 years per year, okay? Bare minimum. Now, you can value a company like that somewhere between 15 and 25 PE ratio, which means we're talking about a stock that should go somewhere between $215 and $359 come 2029, right? And this is a stock that's what, 60 something dollars today? It's a very low price stock, in which gives me a compounded annual growth rate of, we're talking, mid 20s to potentially 40% over the next few years. That's really attractive. And so that's why I talk about, you don't always need some crazy growth company to make a lot of money in the stock market. There's opportunities like a PayPal here that are money makers and are going to be huge money makers over this next number of years without ever experiencing great growth. Like 7% revenue growth on average is not much. Like that's decent growth. And yet the returns are going to be anything but decent. You're going to see PayPal severely outperform the stock market, and you'll see PayPal outperform even a lot of growth stocks that have already priced in their futures, right? And by the way, in regards to PayPal, guess what? It used to be one of those companies. PayPal used to be one of those high growth companies that trade at ridiculously high PEs. And then you know what happened to the stock? It went from $300 to $50. That's the risk you take when you're willing to pay crazy high PEs. With a PayPal, right now, we're getting good solid growth at a very fair PE, actually a very undervalued PE. And so the return profile for PayPal sets up phenomenal for the next 3 to 5 years. Phenomenal. Keep this in mind. It's about what you pay in the stock market, not just about growth rates, okay? Now, Alex Chris has done a very good job so far. He's still kind of early days in regards to PayPal. He's been there for a little over a year, but he's done a very good job so far. And the way I look at this stock is anything under $100 is a gift in regards to this one, okay? Alrighty, next stock up here, number 4 of 8, is another financial related company, but different, and that's Sofi Technologies. Sofi Technologies is at the intersection of, I would say, new age banking and really digital first platform and fintech, okay? Now, when it comes to SoFi, so far we're up 73% on the stock, up $19,000, and we're still very early days in regards to the whole SoFi story, okay? Look at that growth that has happened for SoFi, and look at the growth that is expected. Just look at that for a moment. It's almost too perfect, is it not? Look at it. It's almost too perfect of a chart. It's like, how could it be that good? That's SoFi. Anthony Noto and the team has been executing on a high level, and that's even with all the crap going on in the world, which is a lot. And yet, they're executing their business as flawlessly as you possibly can. Insane. Now, the way I view SoFi, as long as Anthony Noto is able to get this company through the next couple of recessions, that will happen over the next 10, 20 years, right? Never have the company go belly up because it got over leveraged or something, and continue to make good loans to people with good credit profiles over the next 10, 20 years, never get too greedy. SoFi will be on the list of top 10 biggest bank holdings in the world. There's no doubt in my mind because they continue to attract more and more members. They have an asset-light business model, very asset-light, especially compared to all the big traditional banks. And their revenues are going to continue to climb, and their profitability can continue to climb. And the way the company's structured, they think growth first, so they funnel a lot of those profits right back into the business. There's no doubt in my mind that as long as a company never goes belly up over this next 10, 20 years, that they will become one of the biggest financial institutions in the entire world over the next 10, 20 years. I can see the writing on the wall. And then when we talk about those sorts of companies, we're talking about companies that have hundreds of billions of dollars of market capitalization. Hundreds of billions of dollars. That's where we're talking about SoFi going over time. And SoFi is a $13 billion market cap. They're a baby company, okay? But I could tell you, they're starting to take big market share. And eventually you're going to be talking about a company with 20 million customers, 30 million customers, 50 million customers, so far, as a company builds and builds. Now, Anthony Noto, keep in mind, this is also something people haven't considered. There is a chance that SoFi might sell the whole company a few years from now. I hope that's not the situation. I don't want to see SoFi certainly sell anytime soon. But there is a potential that maybe someday Anthony Noto and the board might decide to sell the company, right? Let's say SoFi, it's a few years in the future and SoFi is a $50 stock or something, right? Maybe Anthony Noto will look at the company at that time and want to sell to somebody like a JP Morgan, a Goldman Sachs, and Morgan Stanley. Remember, these companies are deal makers. And so as SoFi gets bigger and bigger, it's going to become much, much more attractive for somebody like a JP Morgan to try to buy them out, or a Goldman Sachs or Morgan Stanley. And do remember, Anthony Noto used to be a managing director at Goldman Sachs. Also remember, Goldman Sachs has had a tremendous amount of trouble trying to grow their, let's call it, more mass market business. Goldman Sachs is very, very successful in high net worth individuals, right? The wealthy. But they've, in my opinion, kind of failed in a big way when it comes to attracting the everyday person. SoFi has not. SoFi is very successful with the everyday person. And so if Goldman Sachs ever wants to get that strategy out, they might try to eventually buy out SoFi a few years from now. So I hope that doesn't happen, but there's a potential. And I think I want to talk about this before everybody else starts talking about this, because no one's really talking about SoFi getting bought out maybe a few years from now. And I want to put that out there, before everybody else kind of jumps on that bandwagon over time. Number 5 of the 8 stocks is Cheesecake Factory. So far we're up $21,000 on Cheesecake Factory. This does not include all the dividends received from Cheesecake Factory. And this one's just a beautiful, beautiful company, an easy stock to just buy and buy and buy. All 8 of these stocks, that's the thing about all 8 of these stocks. You buy these stocks and you continue to buy them for at least the next year or two. And you just keep buying more shares. If you got to go up on your cost basis, who cares? You got to go down on your cost basis, who cares? You just keep buying shares and buying shares and buying shares of these stocks. When it comes to Cheesecake, we're talking about, obviously, they got the cash cow business, that is a Cheesecake Factory. But they have 2 growth concepts, Flower Child and North Italia. They're going to expand all over the United States of America over this next decade. So they have 10 years of growth just for the Flower Child and North Italia concepts. And that's minimum. And then you look at all the restaurant chains coming behind that. We're going to be talking about this company's going to be growing restaurants for a long time to go in the future, right? Cheesecake was one of the stocks I featured on 4 Stocks I'm Buying Now, March 2025 edition. So if you want to hear me talk very in depth and get into the nitty gritty stuff in regards to Cheesecake Factory, check that video out there, okay? Additionally, before we get into number 6 of these 8 stocks, Make sure if you never got to see this video, watch this video at some point in time. This is the best video I did in 2024, in my personal opinion. 16 years of stock market advice in 52 minutes. Listen, if you ever see that thumbnail and you got 52 minutes to spare, watch the freaking video, okay? You're going to get so much value out of that one. Everybody that's ever watched that video loves it. It's one of my most loved videos, if not my most loved video I put out in 2024. So if you ever get a chance, watch that baby, okay? Alrighty, number 6 of these 8 stocks is Meta. Yes, Meta. So far, we're up $783,000 on Meta in the public count. This is just an easy buy, man. You know, they made it real easy, especially with the sell-off recently in the NASDAQ. They made it easier than ever. Here's my base case for Meta, okay? We all know Meta. They own Facebook, they own Instagram, they own WhatsApp, they own, the Meta Quest products. I mean, they're just a beast, okay? Listen, here's what we're looking at. This is my base case for Meta. And this is taking into account a recession in the next couple of years. 12% revenue growth a year. Easy peasy, lemon squeezy. That puts us at a little over $300 billion of revenue come 2029. 15% net income growth per year, which puts us around $115 billion in net income come 2029. Do keep in mind the company's going to also be buying back a ton of shares probably over this next 4 or 5 years as well. Now, we're going to be talking about a company that should easily command a 25 to 35p. If you're growing, low double digits revenue and mid double digits net income, easy peasy lemon squeezy to grow to have a P in the 25 to 35 range, which means the stock should cross $1,000 per share in either 2026 or 2027 for the first time. I don't think it happens this year. That's my personal opinion. I do not think we cross $1,000 in 2025. I do think we cross $1,000 a share in either 2026 or 2027. And then we build from there, and then we're on the path to $2,000. And $2,000 will probably be crossed, in my opinion, like 2030 in regards to the stock. So, easy buy, beast balance sheet in regards to this company. And, something that no one talks about in regards to Meta, and this is totally gets forgotten. Listen, Meta is now a dividend-paying company. A dividend-paying company. Now, their dividends are really small. I think they pay out, I believe it's 50 cents a share you own every 3 months, right? But keep in mind, the dividend payout ratio is in the single digits for this company, which is nothing. Like a normal dividend payout ratio is in the 30 to 40% range, right? Somewhere around there, roughly. If you're talking about you're really pushing heavy on your dividends, you'll pay like a 50, 60% payout ratio. Listen, a single digit payout ratio is nothing, which means Meta is going to be able to go up on that dividend year after year for probably like the next 10, 20 years. So the dividends I'm collecting from Meta today are very small compared to the dividends I'll be collecting from Meta 3 years from now, 5 years from now, 7 years from now, 10 years from now, assuming I still hold the stock then, right? Long way to go in regards to dividend growth. So Meta, an easy peasy lemon squeezy buy. Next stock up here, number 7 of 8, is what you might consider its brother of a stock, and that's Amazing Zon. Number 7 of 8. So far, we're up $93,000, and this one up 75%. Amazon. You understand there's 3 core segments of Amazon. They own a lot of different businesses, but there's 3 big dogs that really matter. Their e-commerce business. Their e-commerce business has a Prime attached to it, right? The Prime business is phenomenal. It's like the Costco membership, but on steroids, right? It's just like, they're able to make a lot more from it. They're able to get people more locked in the ecosystem, able to get them to just continue to buy from Amazon, right? So when does the e-commerce business for Amazon stop growing? I don't know, but I don't see it anytime soon. I mean, we're probably talking that's decades from now in regards to e-commerce business not growing anymore. That's so far in the future, like, you're going to understand, in order for Amazon's e-commerce business not to grow, somebody's going to need to build out some service that becomes so big and massive that it disrupts Amazon. How's that going to happen? You could make an argument that Amazon hasn't even really disrupted Walmart that much, which is crazy to think, because think about how big Amazon's e-commerce business now. And you think that would have been devastating to Walmart. Like, Walmart's doing just fine. So Amazon's e-commerce business has decades of growth ahead. Like, my kids that are little kids are going to likely be shopping on Amazon when they're grown adults. Decades of growth ahead for the e-commerce business alone. Then we talk about Amazon Web Services. That's a backbone of business. That's a backbone of the internet nowadays. as long as businesses continue to grow, like Amazon Web Services is going to continue to grow and become bigger and bigger. And they have their advertising business, which they do a lot of ad spots now on Amazon. Like if I search a product now on Amazon, it's a lot of sponsored posts. So they make bank off that advertising. But additionally, when it comes to their advertising business, it's also things like their Prime games. They have football games on and other sporting events and things like that. And that's ways they generate advertising. There's other ways as well. So they have a whole advertising network now at this point in time. So 3 core businesses. That when do those companies stop growing? When do those businesses stop growing in Amazon? Dude, it's so long from now that you can't even fathom it. It's so long from now, right? Now, additionally, you're getting Amazon at dirt cheap valuations. Like, go back throughout Amazon's history, never try to find them trading at a 31 forward P. It's dirt cheap for Amazon. For a company that has decades of growth ahead, decades, this is dirt cheap for Amazon, okay? Now, number 8 of these 8 stocks is AMD. AMD, the only stock I believe of all 8 of these stocks I shared that I'm actually down on as of right now. But AMD is going to be an absolute beast over this next 3 years, okay? I mean, an absolute beast of a stock, and this is one I'm like, banging my hand on the table right now. Like, you see me buying, it's not just about my words, it's about my actions, right? And if you look at my actions in regards to AMD, if you follow me, if you're a member of the private stock group and you see the stocks I'm buying and selling each week, if you're a member of my Patreon, you see the stocks I'm buying and selling each week, what is a common pattern? You see me buying AMD stock almost every single week right now. And I'm doing it in my private portfolios as well. I'm buying AMD almost every single week. I'm buying AMD and I'm buying AMD. And there's reasons. Like, it's not just, let me throw some money around. There's like so much upside potential in the stock over the next 3 to 5 years, and such a low downside risk in the stock over the next 3 to 5 years. It's ridiculous. And so what Lisa Su and the team has built is phenomenal here, and it's a very big opportunity. And as far as the nitty gritty for AMD, there's a very specific video I want you guys to watch. If you care about AMD, you might not, don't care about this video, but if you care about AMD, you have to see this video I made 3 weeks ago on the Reaction channel. Jeremy Lefebvre makes money. It was an AMD and Palantir video. You could just kind of skip past the Palantir part if you want. Looks like about 93,000 people got to see that video so far. But that video there, AMD and Palantir, this changes everything. Watch that video. Specifically the AMD portion. I'm telling you, a lot of very, very good information if you're trying to understand why I'm buying the stock week in and week out pretty much right now. Watch that video. Additionally, watch this video. This one was on the main channel I did just over a month ago. Keep buying AMD and don't stop. Definitely a video you're going to want to check out, okay? Appreciate you guys joining me. As always, thank you so much for being here. If you're looking to apply, join private stock group, private wealth group, get access to all my best course curriculums, Discord chat access, see the stocks I'm buying, selling each week, all that good stuff. Pin comment down there, click on that, fill out a form. We'll see if we can get you access to that in the next week or two. Much love and have a great day.